The collapse of the housing boom in late 2006 led to foreclosures never anticipated by banks or most economists. Approximately 4.5% of U.S. mortgages are now in foreclosure. Here with us is Linda Torelli, a bankruptcy attorney. Linda, thank you so much for joining us.
Thank you for having me.
Walk me through the process after you get a mortgage. What happens?
Well, you know, when you get a mortgage, you celebrate, you're popping champagne, you're carrying your loved one over the threshold. And within 24 hours of that, your loan has already been sold 3 times. It goes from the party that you originated your loan with. So let's just say that you got your loan with the Acme Mortgage Company, and I'm just making up a name there. The Acme Mortgage Company then sells it to something we call a seller or a sponsor. The seller or sponsor will be a different entity. They will then sell it to something called a depositor or a purchaser. And then ultimately that depositor or purchaser will sell it to a securitized trust. So basically, you picture a trust as being a pool of tens of thousands of mortgage loans that were all acquired in a similar fashion, had gone through A to B, B to C, C to D. And then on Wall Street, they sell securities to invest in that pool of mortgages, in the interest on those mortgages. So that's basically what's happening behind the scenes. But as the consumer, all you see is that you're paying your mortgage each month to the same person. You have no idea that it's been transferred all those times. And you just assume very often, most people do assume, that the party they're paying is the party that actually owns their loan. And in fact, it's not.
Now that we're seeing all of these foreclosures, what's the real issue behind what's happening?
Well, what's happening now, the issue is multifaceted. You have the consumer end. The consumer doesn't know who the proper party to sue them really is. You suddenly get documents from, in foreclosure that you're being sued by a securitized trust you never heard of. How do you know that trust owns your loan, and how do they acquire, and why are they suing you? Those are questions that you need to have answered, and you have every right to ask those questions and have those questions answered. On the securities end of it, you have all of these pools of trust that never actually acquired their loans, and yet they've sold securities on having acquired those loans. That's what we call a Ponzi scheme.
How many banks in the country are doing this? Is it most of them?
Every one of the larger banks that you could possibly name, the ones that we hear advertised all the time, certainly they're all involved in this.
Explain a little bit what a robo-signer is. I've seen that term, and what does it mean, and what do those people actually do?
I think it's a very well coined term, if you don't mind my saying so. We find that the banks, and really any one of the big banks you can possibly name, they all have departments that are called document execution departments. What is a document execution department? It's a department that executes documents. And basically what they do is they have people who sit there and just rubber stamp or actually sign a name that may be their own, maybe not be their own, on documents just all day long. We have depositions of robo-signers who have signed as many as 5,000 to 10,000 documents per month. And even though these documents are all notarized, they're never signed in the presence of a notary. And we're finding that to still be the case today.
Explain to me what's happened over the past half of the last decade as we saw more mortgages being written. Why has this become so prevalent?
Well, part of the problem is during the boom, the name of the game was sell as many of these loans as you possibly can and start funding these trusts so we can sell securities on Wall Street. And in that haste to do that, a lot of times the paperwork just got very, very sloppy. Either the transfers were not done properly or perhaps not done at all. And no one ever really predicted that we would have this foreclosure crisis, because at the time that you're selling all this and times are good, no one's thinking about foreclosures. Back during the boom, foreclosure was a rare occurrence. It was not something that was happening like it is today.
And so for people potentially getting a foreclosure notice, how can they spot false documents?
You want to take a look and see who is actually suing you. If it's a mortgage servicer, a servicer is acting as a cashier for the real party in interest. In other words, the party that actually owns your loan. So if you're paying your mortgage, for example, to Citibank each month, it doesn't mean that Citibank owns your loan. Citibank may be collecting that loan on behalf of another party, usually a securitized trust. But when you get the actual foreclosure papers, take a look and try to find if there's something called an assignment of mortgage. That is usually the first document I always look for. And take a look and see, was this loan assigned from party A to party B? And when was that done? If you see that party A is an entity that is no longer in existence, and yet the document was signed just last week, you very well may have a false document in your possession there. And that's something that needs to be brought to the attention of your attorney, needs to be brought to the attention of the court.
How are courts treating these false documents?
You know, it's really luck of the draw is what I'm finding. Some judges are very offended by it, as they should be. I think the integrity of our judicial system and due process is something that it's just that is the American way. That's what we're all about. On the other hand, there are judges who say, so what? You owe the money to somebody. Who cares if you pay the wrong party?
Are we likely to see a resolution anytime soon to this issue?
If we have something called judicial modification, which did exist prior to 2005 in our bankruptcy courts, the bankruptcy judges can actually modify the loans and do the job that the banks are refusing to do. And this is something that I think that we really need to take a very good, long, hard look at, and perhaps bring back judicial modification as an answer to try to resolve a lot of this foreclosure crisis.
Linda, thank you so much for joining us.
You're very welcome. Thank you for having me.
We've been speaking with Linda Torelli, bankruptcy attorney in New York. I'm Ruben Ramirez, and this is Reuters.